Good morning, friends. I've been observing an uptick in real estate purchases largely due to the anticipation of interest rate hikes. This week, I've had more than 40 people call me and ask me what's going on and why aren't the prices dropping. The increased buyer sentiment has been so strong that our phone lines have been ringing off the hook every single day, and I have been looking for new agents, calling every single school, all friends and colleagues, in hopes that we can find some people to help us service our clientele. Good economic news has resulted in a spike in interest rates. This comes as the recession fears are starting to recede, pushing buyers to secure their mortgages before rates go up further. The June Federal Reserve meeting indicated a sentiment towards continued rate hikes among some participants, influenced by a tight labor market and strong economic momentum. This sentiment has sparked a buying spree in real estate as potential homeowners hurry to secure loans before these anticipated hikes. The recession fears have eased. A surprising upward revision of the first quarter GDP from 1.3% to 2% removed short-term recession fears. This revision has increased the likelihood of a Fed rate hike in July to nearly 100%, a clear signal to buyers to act swiftly. The consumer spending increased. A boost in consumer spending was seen due to 8.7% increase in Social Security benefits, adjusted for higher inflation. This, coupled with low unemployment rates, has further fueled the buying frenzy. The ADP report showed private job creation for June at a shockingly high 497,000, more than double the 220,000 expected, underlining the strength of the economy and potential for rate hikes. The Bank of England also had an influence. Market expectations of higher rates in England also put pressure on the U.S. rates. As foreign rates increase, so do rates in the U.S., pushing buyers to secure their mortgage rates now. So what's the bottom line? The higher for longer narrative from the Fed, supported by recent data, has resulted in a spike in rates. This has encouraged potential homeowners to purchase before rates increase further. Looking ahead, the June Consumer Price Index and Producer Price Index are expected to be released next week, which could have significant impacts on rates. The anticipation of these releases is further driving home buyers to make purchases before potential rate hikes. In the MBS world, as prices for mortgage-backed securities go higher, rates move lower and vice versa. Currently, rates are elevated, and if they don't decrease, we can expect that buying frenzy to continue as people try to lock in their rates. Now clearly, everyone always asks, when is the best time to purchase? What we can see is that many of our clients are calling daily asking for where the deals are, because they don't want to be left on the sideline as interest rates increase toward the rates of the 80s or 90s. Newsflash, when the talking heads on the news are screaming the sky is falling, that is the time to seek opportunity. If you don't believe me, trust Warren Buffett. He says, when people are scared, be greedy, and when people are greedy, be scared. Right now, so many people are scared, so the time is now to seek out deals that serve you. If you know any agents who are struggling to find business, they're in the wrong place. Please ask them to call me so that we can help get them on our team to help support our clientele. Sellers, if you've been on the fence about selling your home, the time is now. As mortgage rates increase, inevitably prices will soften. That will hurt your bottom line. Buyers, if you're listening to this, you may be thinking, well, if the prices are going to soften, then maybe I should wait to buy. Wrong. That is only true if the price that things come down is directly supported by the increase in mortgage rates. If the rates in the mortgage industry go so high that the monthly expenses become untenable for you, then it does not matter if the price of the home has dropped a little bit. But for a seller, that matters because that hits your bottom line directly. As a buyer, you should be looking at your monthly expenses when you purchase your home. Understand that eventually the rates will likely go back down again. We just don't know when. And time has value. The longer you sit around waiting, the more pain you will receive. Now, a quick history moment for you. In the 80s, it was common to see interest rates anywhere between 16.5% to 24%. And in the 90s, 12.5% was considered a good deal. So, if you think the rates of today are high, you should check your history. Give us a call so that we can help you find a home today before the prices become even higher and homes become unreachable. Take care. My name's James Ruff. Look forward to hearing from you.